Good morning, America, and welcome back to Risky Business. I'm your host, Penelope Pope, and today we are joined by two prestige financial managers, Ruby Westlake and Charlotte Weber.
Thank you for having us, Ms. Pope. We are excited to share some tips and tricks for investing in the stock market with all the viewers at home.
Awesome. Can anybody invest in stocks?
Of course. Stocks are supposed to be for everyone to invest in. You don't have to be a billionaire in order to invest in stocks either. However, some stocks might be more expensive and geared towards those who are wealthier. There are still plenty of low-priced stocks available for purchase.
Also, age doesn't matter either. We have seen several people under 18 invest in stocks. We have even seen kids that are 8 years old invest in their own stocks, with help from parents, of course. There is no age limit on investing.
Wow, what am I technically buying when I invest in a stock?
When investing in stocks, you buy part of a company. For example, it is like a company is made of a bunch of bricks and you own one of those bricks, but the brick next to yours is owned by another investor.
Am I able to invest in any company?
Good question, but the answer is no. Not every company wants people to own shares of their company. You can only invest in public companies. These companies are called public because they are open to the public and can be invested in. However, some are private companies, which means that they are owned by a group of people and the public cannot invest in that company.
Are there kinds of stocks that I can invest in?
Yes, there are two types of stocks that someone can invest in. You can invest in preferred stocks or common stocks. Preferred stocks are usually less risky stocks and guarantee a dividend, usually 4 times a year or every quarter. A dividend is when a company shares part of their profits with the stockholder. It means that you are giving you money for investing in your company.
Common stocks are those that do not guarantee a dividend and are usually considered more risky. However, these people can vote on the board of directors and/or issues within the company.
How should I choose to invest in a company?
Choosing a stock is not an easy task, and even the best financial managers can't always predict the right stocks to invest in, but there are some tricks in picking the right one. Here's an example of one company's statistics. This information is very important and can be a key factor in deciding if you should invest in a company or not.
You should look at the company's beta number. A beta number tells you the volatility of a stock. When a stock is volatile, it is more likely to have a price that moves quicker and more drastically. This can be good or bad, depending on how long you want to be invested in a stock. If you want a long-term investment and want to be safer with your stock choices, you should invest in a stock with a beta number less than 1. However, if you want more risky investments, you should invest in a short-term stock, which has a beta number more than 1 and makes or loses money quicker.
Also, invest in a small cap company. If you're looking for a short-term investment, these companies will help you go faster. Small cap companies are companies that have a total market value of less than $2 billion. These companies have prices that fluctuate constantly. They can offer the greatest reward and risk.
What is the difference between a long-term stock and a short-term stock?
This is an example of a long-term stock chart. There are some noticeable things in this graph. First off, a long-term stock is one that usually goes up steadily. These stocks are less risky and have been around for a while. Older companies are usually more steady than short-term stocks.
Here's an example of a short-term stock. This type of stock moves more quickly and goes up and down more frequently. These stocks are more risky and usually are smaller startup companies.
You talk about risk quite a bit. What is risk and what kinds of risk can you take when investing in stocks?
Risk is the chance of losing all or some of your investment. There are a couple types of risk you can take when investing in stocks. There are conservative risks, which are the safest risk you can take. These stocks are preferred or have a fixed income, where the company has to pay you money. There are moderate risks, which are risks where you invest in a young company, but the company has great potential to keep growing. Finally, there is speculative risk, which are stocks that are unpredictable and can change quickly. Usually they have higher beta numbers. These stocks have incredible highs and devastating lows.
What company should I invest in, and how do I know when to buy and when to sell a stock?
It is really hard to tell you exactly what company to invest in, but you should be investing in companies from all different sectors. A sector is a group of stocks that are all in one industry. An example would be that the pharmaceutical companies are part of the healthcare sector, along with many other company types. By investing in many stocks, you create diversification within your portfolio. A portfolio is the group of stocks that you own, and diversification is when you invest in many types of sectors. Making sure to do this will help you to have a good selection of big winning stocks.
You should buy stocks when they are close to their 52-week low and sell when it's on its 52-week high or even over. This is why you need to be watching and analyzing the statistics of a company before buying it. It is important to watch and evaluate your stock's performance regularly. To evaluate a stock's performance, you should look at the P/E ratio. If the stock goes up and the earnings do not, then the P/E ratio won't improve along with the value of stock. This most likely means that the stock will come back down. From this, you can tell if your stock is doing well and if you should sell sooner rather than later.
Where can I find the statistics about the companies?
These statistics can be found on websites. There are many websites that list these statistics and extra information about the company, but one of the biggest financial websites would be Yahoo Finance. Also, I highly recommend Morningstar. Like I said, there are lots of places on the internet that you can find this information.
Before we go, what are some tips for investing in stocks?
Don't invest in a company unless you can thoroughly explain what the company does to a 6-year-old. Evaluate your position before investing in a stock. This will help you determine the risk you are willing to take. Let your guts drive your decisions, not your head. Big companies are not always the answer.
Take your time choosing stocks. You don't have to buy the first good stock you see. Don't obsess with looking at the statistics. This just causes panic for short-term events that will fix themselves.
Well, thank you guys for coming and sharing this extensive knowledge with us. That's all the time we have for today, but I'll see you guys tomorrow morning. Penelope Pope for Risky Biz News.